The New York stocks only breadth indicator in the bottom window, the ratio adjusted volume oscillator for stocks only in the next window up, the NYA McClellan volume oscillator ratio adjusted in this window, and at the top the ratio adjusted McClellan breadth oscillator for the NYA. NYA meaning all, everything, stocks, ETFs, preferred stocks, closed-end funds, ETFs, the list is endless, and the stocks only representing stocks only in the New York composite. And the first three are ratio adjusted, and obviously the stocks only breadth indicator in the bottom is not ratio adjusted, as indicated by these high numbers over here on the right, and the other ones are ratio adjusted. You can read about it here in red, and that brings it down to earth and gives us a zero line. So first, this arrow pointed up right here in the ratio adjusted McClellan volume oscillator has been bugging me ever since I pointed it out in the previous videos. You can see all the other ones were pointed down along with price up here, and the uptrend for this arrow and volume started on the 27th and ran to the 3rd, and then really started a big run up. As you can see here, everything started pointing up after that, along with the price action here. You can see just shot straight up. So here's October 3rd, and here's the Hamas invasion of Israel here on the 7th. So for 3 days it ran straight up. And here we're looking at the daily Qs cloud chart, and I believe I stated and asked if there's something fishy going on here. It just didn't quite smell right back then. So here's the volume bars circled in red, and that first one is the 27th, and that last fourth one here is October 2nd, and that was unusually high volume. You can look back and see that there really wasn't any high volume bars to the upside like this in the past. You'd have to go back to May, back here, for 3 days in a row, and this one was 4 days in a row. And then moving down, you can see the MACD bottomed out in that period there. RSI took off to the upside, and the on-balance volume really came in strong. So was this investor terrorism by one person or a group leading up to the Hamas invasion on the 7th? So was someone trying to run it up so that everybody in the FOMOs and the MOMOs can get on board and then pull the rug out from under the American investors and just generally create a lot of havoc in the U.S. stock market? And if the conspiracy theory doesn't go that deep, then it's a good example of how one person or a group can come in and spark an uptrend by buying the most popular ETF in the world and getting all the FOMOs and MOMOs on board for the upside, and then pull the rug out from under them. We call that fattening the frog for the rat. And definitely view the link to videos for this area where I noticed that breadth and volume was leading the way over price here. So that brings us to this area here where I'm asking and wondering, are we going back to the mainstream version of the bearish divergences where the AD line will be headed down and the breadth and volume oscillators are headed up along with price? So there's two instances here, these blue arrows, and the AD line is pointed down here, and you can see here how the downside ensued after that. Now I'm wondering if it's the same for this current divergence here. Here we have the AD line pointed down and dashed red in this circle. All the breadth and volume indicators pointed up along with price here in blue, you can see. So the telltale event will be if there's a bounce as the S&P 500 approaches 4,200 area and the buyers come in and send this breadth and volume oscillator system up and continuing to go up, and the AD line is pointed down and doesn't follow along with breadth and volume. Same thing with price too. If there's a bounce and the arrow still stays in a upwards trajectory and the stocks only AD line does not improve or even gets worse, that will be a huge clue to head for the exits. Or we're waiting for the volume for the stocks only 39 and 19 lines and simple moving average here. So the red one is the 39 and the blue one is the 19. So if they start getting pushed down and everything has a downwards trajectory along with price, I won't scroll up, then that's huge trouble too, but we won't be able to tell that until it happens. So more downside could ensue before we get that indication. So the evidence of late, barring this conspiracy theory here, is that the mainstream version of these divergences where the AD line and price differ along with all these breadth and volume oscillators is starting to work again. So that could be in a high probability that that is the case now.